Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the Aussie housing markets are getting worryingly frothy. But first, American job growth slowed sharply in March amid continued layoffs in the embattled retail sector. But a drop in the unemployment rate to a near 10-year low of about 4.5% suggested their labour market strength remained intact. The jobs growth was far below market expectations, but markets are not expected to react much at all. This sort of survey result has happened before, and as recently as May 2016, and that was followed by very strong gains in the subsequent month, and most people expect that to happen this time. Average earnings rose 2.7% over the year. China has stemmed its currency outflow. In March, their reserves stayed just marginally above $3 trillion, according to the latest official data released over the weekend. They also announced tougher enforcement to keep it like that. However, they are also allowing their banks to go on a lending and spending spree outside the country. And in China, there is an interesting process being started in the southwest. Beijing is pushing ahead with a regional agglomeration that includes Hong Kong and Macau. This is an area with over 100 million people and will be planned as one unit. The days of an independent Hong Kong seem numbered. Actually, if you look at the map of the area around Shenzhen and Guangzhou, you realise just how small Hong Kong really is in the regional context. In Australia, Ralph Norris, currently chairman of Fletcher Building and previously the CEO of Commonwealth Bank, told the Aussies they are not in a housing bubble and that banks will easily be able to ride out any correction. But he did finger long-term inadequate housing supply as the main driver behind the recent sharp rise in house prices. But just how frothy those Aussie housing markets are was reinforced over the weekend. Preliminary figures for Sydney, where the number of auctions listed rose from 1,392 from 1,104 over the previous week, show the clearance rate of 81.5%. Last week it was 78%. In Melbourne, the clearance rate was 81%, up from 79.6% the previous week. The total number of listings also increased to 1,458, a 27% jump from the prior week. Singapore is often touted as one of the world's most expensive cities to live in, but that locals aren't buying it. They have developed a more extensive index based on local residents' experience rather than the more usual expat metrics. And the results are surprisingly different from the usual reports. On the basis of local incomes, costs and purchasing power, the world's most expensive city to live in for locals is Sydney. Melbourne, Brisbane, Perth and Adelaide are all in the top 11. And coming in at number 20 is Wellington, with Auckland at number 27 of this 103 city list. Don't dismiss this latest ranking too fast. It seems much more relevant to public policy discussions than the usual referred to by The Economist. In New York, the US Treasury 10-year yield is slightly higher at 2.38%. Oil prices are up and now over $52 for the US benchmark, while the Brent benchmark is just over $55 a barrel. The gold price is marginally higher today as well, at up $3 at $1,254 an ounce. And the New Zealand dollar starts the week a little lower at 69.4 US cents. On the cross rates, the Kiwi is unchanged at 92.4, and against the euro is at 65.5 euro cents. The TWI is just on 74.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.